Welcome back to another YouTube video, and this week my guest is Aaron Knightley. Thanks for being here, Aaron.
Cheers, Justin.
We're going to be discussing high net wealth investors, how to find them, how to work with them. Now, when you hear the term high net wealth investors, it doesn't just mean property. It can also be used by entrepreneurs, startup businesses. But of course, this is a property channel, so we're very much tailoring it around that. But just to get started, Aaron, could you give us a bit of background on yourself and what's led you to this point in life?
Yeah, sure. Well, thank you for organising this, setting this up, Justin. So,
That's right.
hopefully this will be a good video. So, real summary and basically where I started. I know you've heard it a million times now, but essentially came from logistics background, normal education, normal background in life, working background, and from flittering from one job to another. I didn't go to college or anything like that, but flittering from one job to another, which many entrepreneurs do, and you sort of end up realising that maybe you can't settle down in one role. I did that whole typical thing. So I then met with an old business partner later in life, through coincidence really and timing, and basically we went into projects that we did. We went into property ventures. We did all kinds of stuff. We did small businesses, eBay business. We did a real mixture of things. So there was no kind of one thing. But what was very clear is that there was a fire in the belly to do something more than a 9-to-5, tie yourself down. So it kind of led me on a journey, which education followed. Property was a big part of it. But ultimately, where my niche is now, it's very much within the investment market and working with high net worth clients to this day. So, yeah. Real overview summary.
Yeah. Well, brilliant journey so far.
Yeah.
And I think sometimes life, you've got to try lots of different things to realise what you like, what you want to do. And but I think it's great that you've managed to build a lifestyle that isn't your typical 9-to-5. You've managed to do something a bit different and obviously provide a nice lifestyle for your family as well. So. And obviously, with the topic of this video being high net wealth investors, why should someone seek to work with a high net wealth investor, do you think?
So with the term high net worth investors, so I think you need to clarify and understand what path you're on, what journey you're on. I think you really need to have a clear vision and see beyond 2, 3, 4, 5 years. You need to see really long term, and then really match that in with your business, with your property portfolio. What is it in your niche? What are you actually doing that would require high net worth investor finance? Now, you can call it other people's money. You can call it high net worth investment. You call it whatever you want, but it's someone else's money. Now, there's a big difference. Are you going to be using bridging finance, regulated finance? Are you using a private bank? What kind of finance are you using? The clients that I work with are all private individuals. These are 9-to-5 job investors who are still working full time. They're directors of their own company. They come from all walks of background, and that's what we need to understand. So why would you need finance? A typical growing a property portfolio.
Yep.
Starting your own development projects, a startup company. You've got your new tech company that you need a lot of capital. All many different reasons. So you all have your own reasons, but to work out why and how will that benefit you is what you need to understand. And if it is a requirement, then you need to go about finding high net worth investors. Where are they? The big question is, I need someone else's money. The saying goes, as it was recently on one of the nightly roundtable call, was to become wealthy, you need to borrow from the wealthy, but you need to do it in an ethnic way, in an honest and open way, and you need to be able to back yourself and be putting something in the game in order to really use someone else's money. But where are they? That's the question that I always get asked.
Yeah, which you are also nothing other than an expert on, I'd say, these days.
Spend a lot of time doing it.
Yeah. So obviously we will come back and touch on a bit more, about how to find them and how to work with them. But whilst, on the topic of using other people's money and investor funds, a lot of the educational courses out there, they'll have you believe that from day one you should be going out and finding other people's money. And I'm not saying that you shouldn't, but it's obviously, a lot of people and a lot of circumstances, you should perhaps have a bit more experience. And that's my opinion in terms of getting other people's money from day one. What's your opinion on that?
So I use an example because someone asked me about this, and I think it's a good example. Is that if you want to, let's just say, expand your property portfolio, and you're looking to build using someone else's money because you've got a limited amount of cash yourself.
Yeah.
It's going to be really hard for someone to part with hard-earned money. You know, we're talking about people's money. You know, when it goes wrong, it can go really wrong, and then you could owe the wrong person money.
Yeah.
Do you want to be in that? It's very much fluffed up to be easy, and that it's done like that. It's not. You're essentially playing with someone else's hard-earned money that means emotionally something to them. So that's what we need to remember. And you know, if you use this example of someone who has a small amount of their own money, but they want to build up a property portfolio, is that, are they going to have confidence that you can do that? Have you done it before? Because there's a lot of, I feel that it kind of goes over the head with a lot of these videos out there, is that you can use other people's money, but we're not touching on the fact that, have you got a track record? Have you done it before? Is there sufficient security? Because no one I know would ever lend out money, including myself, knowing that I've got full security and I can get my money back, worst case scenario.
Yeah.
I'm willing to take a punt on someone that is enthusiastic, is willing to put in the work, that, you know, maybe they can't bring the money, but they're willing to put in the work, they're willing to learn, they're willing to be that little bit naive in regards to the learning part of that naivety, not silly mistakes. So can you build a portfolio with someone else's money? Yes, you could, but you'd need a track record. Because where are you meant to start? So what I would say is, if you want to build a portfolio with an investor's money, look to do a flip first. Because what you can do is you can joint venture. And if you joint venture, they can be putting in the money. They can be active because they can oversee the project as well if they have experience.
Yes.
You can be on site, you can be learning, you can make sure the project goes, but they can have full security on that site. And what you do is you joint venture on the profit split.
Yep.
Complete a joint venture. Because if you can complete your joint venture and you call it 50-50, 60-40, however you want to split the profit, if you can prove you can do that project, they now have comfort with you as an individual. Mm-hmm. They may be able to recommend you to someone else, so you might now see referrals or introductions. But also you've got experience. You now have your first track record. With a property portfolio, you can't get that first step.
No.
A joint venture flip, you could.
Yeah.
That's the way that I see it.
Yeah, which I think is a really good option for a lot of people out there, and it's often overlooked because people are wanting to straight away build buy-to-let portfolios, and you know, a large part of what comes with property and working with builders, you know, and building up some kind of power team with solicitors, builders, brokers, can really quickly be learnt through doing a flip. You can generate some of your own income through use of a JV, and then go on to future projects by yourself as well. So good suggestion. I like that one. So now, a big part of what Aaron does, of course, day to day, is working with high net wealth investors, you know, positioning their money into different projects. And Aaron has recently come out with an ebook, which basically talks about the different ways in which you can find high net wealth investors, where they can be found, which are ways in which you wouldn't normally necessarily consider, or they're perhaps overlooked, I would say. But the ebook's really good, and we'll come on to that a bit later. But in the ebook, you mention the story of meeting a man with a black Bentley. Someone can read about that, you know, when they purchase the ebook. But in the meantime, you know, a big part of that story is about utilizing the actual environment that you're in and your people person skills. Yeah. Are you able to touch on that a bit? And
yeah, I mean, we talked about it on the way down in the car. But one thing that is, you know, we're told a traditional way. We're funneled into this traditional way of, you know, we need to go about the typical ways that are out there of working with a high net worth, and that is start with the family. If it doesn't work with the family, join your local property or business meeting and meet their network, the bread and butter, which it still is. It still is the bread and butter, because face to face, looking in the whites of the eyes, that still is the bread and butter, as I put in the book. But where I had this requirement to raise junior equity, which is what I do on a day-to-day basis for my clients, that is not for us as a family, but when I have to raise junior equity is there's a shortage. You can only go to so many events. With everyday life, you know, we're all living our own lives, whether you're working 9 to 5, whatever you're doing, to fit in all these events, you might have your other half saying, no, you need to be back for dinner, or whatever it may be. Everyone has a life. So networking events are great, the bread and butter, but can be time consuming. Yeah. And if you've got a room full of 50, 60 people, how do you know that within those 2 hours you're going to be focused on the right people? So we need to now value and understand our time is valuable, and we need to maximize that, which is when I went on a huge educational journey and to narrow down actually where am I spending my time. There must be an easier way, which is when I came up with the statement, there must be a millionaire within 5 miles of where you live. That is a fact.
Very powerful statement, and it is a fact.
So there must be a millionaire within 5 miles of where you live. You just need to find them. So that's where I started really looking outside the box and thinking outside the box, thinking, where are the rich going? And that's what they are. High net worths are very wealthy individuals. They have a certain amount of turnover. They have a certain amount of assets in the background, and they are about. We just need to find them. And then once you can build a relationship, which takes time, and I think we need to squash this whole relationships are built over a week, or they're built over one LinkedIn message, or they're built over a template email that you've created and sent to 200 LinkedIn contacts. It's not. It has to be tailored for you. It has to be tailored for me. And when you can start to understand the people element of it and that it will take time, when you complete your first deal, it will cotton on very quickly that, okay, that took me 6 weeks just to build the relationship. That's what I now need to get into my head. It takes time.
You have to build relationships up over time, and then, it's not just as you say, it's not a throwaway relationship as well. You're still working with people that you have done for quite a few years now, haven't you?
Absolutely, yeah.
And you also, we kind of touched on, so just backpedaling a little bit there, you kind of mentioned, high net wealth investor. I mean, what defines a high net wealth investor?
So a high net worth investor is someone who's earning, let's say, 125,000 per annum, and they have 250,000 of assets in the background. So that's a high net worth. So if you were to take on a high net worth client, I'd always advise, or always recommend, there's no advice, but I'd always recommend that you have legal paperwork or something drawn up to say that if we're going to work together, you're signing off as a high net worth, because you can lose the capital. Worst case scenario, which is on any product that you ever go into. Worst case scenario, you could lose all capital. A sophisticated investor is someone who is turning over $1 million plus within their business per annum and has been for the last 2 years, or they've been working in private equity for the last 2 years. Again, when you come to work with an investor, it's overlooked many, many times because of that adrenaline rush of thinking, I have an investor, I need to take the deal, I must act upon it now, otherwise the money might go. We need to take a step back, have everything legitimately done, paperwork, contracts, the roles of each individual. Is the high net worth accepting the fact that he could lose all of his or her capital? At that point, then you can start making smart decisions, because everyone is very clear on the role that they are playing. And that's where a lot of people miss the trick with a high net worth investor, is that me personally, I'm not looking to work with retail investors. The everyday sort of Joe walking along the street. I need to be working with high net worth and sophisticated.
And someone who can perhaps more financially, if something was to go wrong, they can absorb that, and
it's suffer the loss.
They fully aware of that risk as well. Whereas someone perhaps at the high street, could really be their pension, their savings pot, and quite drastically change their life.
Absolutely,
So good, okay. One thing that you and I discuss a lot off camera, is actual property investing doesn't have to be into a property as such. There's lots of other forms of doing it, and within the property industry, but by actually buying into a property yourself. Are there any things that you particularly like or that you do yourself in terms of investing that way?
So again, so property is a great asset, and for us, because we can see long term, so I'm very happy and confident to say, and I'm very content in saying that we're young at the moment, but I'm very happy to picture myself at 55. I'm really happy because, it allows me to be grounded and make smart decisions now for the future. So property will end up becoming our exit and end goal. So when we can liquidate all assets, all tangible assets, and then put into property as a pension, because obviously we could talk about pensions and whether people will have their pensions after 2030 could be a whole nother subject and a conversation.
Whole nother interview.
Could be a whole nother interview about pensions and whether they're there. But look, property is great. We've been involved in HMOs and the refurb of the HMOs and the stress of HMOs and dealing with the tenants and self-managing, and it's a lot of work. And what for us, for me especially, I have to now really work up time value against what the reward is. And if they're not matching up, I probably won't get involved, because we need to really maximize our time, and I'm a big family person, so my purpose is to create a better life in order to spend time with family. That's my goal, that's my why.
Yeah, brilliant.
So yes, property is a great source. Is it a main focus of mine right now? Not currently, because there are other ways to generate good incomes, and I've been blessed enough to learn that through working with certain family offices and being in London around the right individuals, and surrounding myself and being the least smartest person in the room. So I've managed to adopt and learn a lot of information on how to make really good returns, but not necessarily through property.
Yeah.
But property will be my end goal, and to liquidate and finalise on.
Yeah, good. Okay, no, I'm glad we touched on that, because I think there's a whole world of investing out there that people don't always explore. Property is obviously a really solid asset to buy, but people should also be looking at that kind of diversification side of things, which Aaron's very good at, and he talks about a lot on his Instagram page if you don't follow him. Now, in terms of your day-to-day, working with investors and what you do, what does the typical day in your life look like?
So typical day, although there is no typical day, but trying to average what a typical day would look like is, as yourself, it's early starts. For me, I've always been an early bird, so it will be wake up early, get myself to the gym, get the mindset right, listen to an audible, read a book while on doing cardio, as I know we're both big fans of. Get the mind, get that thinking space. So that's switch off.
Yeah.
That is, let the mind do its thing, release the endorphins, set myself right, and that will be anywhere between 5 and 6 in the morning. Come back, it will be an hour tops with my family before we set off for the day, before my family sets off, and then it will be catching up with, so it'll be going all through emails. So typical will be calls, emails, getting back to clients and sort of prospecting, looking at where the next avenue is, whether that's through what we currently do, looking at my own decisions in regards to, yesterday morning was on a long call in regards to a project we were looking at investing in. So it will all kind of be quick decisions, because again, I know we've touched on it before, but I'm a big believer in making all big and smart decisions and new decisions before 7 p.m. in the evening. Mm-hmm. So make all the important decisions while your mind's fresh, while you're active, while the pre-workout's still running off. So that's how that will look like mid-morning. If COVID hadn't happened, it would be afternoon meetings. So I'd either be heading to London, we'd be meeting locally. So that would be initially working with clients in regards to what they're looking for. So I have clients in stages of 3, 2, and 1. A third grade client essentially is a client who might invest once, twice a year.
Yeah.
A second grade client would be someone who's active more than 4 times, and a first grade client is someone who's extremely wealthy and constantly moving money around for tax purposes or whatever it might be, but they need to be moving and allocating a certain amount of assets. So I'll be catching up with all of these clients, the ones that I've got set in my diary, and we'll be discussing where their next move is, or if there's anything I can help with at that time. And if there is, then we look to structure it through the clients that I work with. And that will be pretty much that good portion of the day. Later on in the day, it will be starting to settle down. It will be finishing off on emails, sending late night emails and prepping for the next day. I like to pre-prep the day before for the rest of for the following day, and using the ways that I explained in my ebook to maximize my time. To meet new clients or deal with existing clients through, essentially, if you can work from home or you can work from your local cafe or you can do it from your phone, why would you not? So I look for ways that I can carry on doing that, which I explain obviously a lot in my ebook, but that's an average day as much as I can round up.
There's a lot of time utilization in your day by the sounds of it. And one thing I like about you is also you work with high net worth investors, but you work with them a lot, but also you invest your own money just as much, which is a really important thing, to keep investing, keep growing your own pot. I know one thing that you've done previously is worked with crowdfunding as well for a fixed return. What are your thoughts on crowdfunding and an advocate?
Crowdfunding, I mean, there's a lot of platforms out there, and what I will say is, to anyone who's looking to invest, and we're going into a time where everyone wants to invest, everyone wants to catch that person in front of them, everyone wants to be a next investor, and we touched on it quite a lot in my last Nightly's Roundtable, is that invest when you have sufficient amount of money. And crowdfunding platforms will allow you to get involved from £100 minimum or even less.
Yeah.
I wouldn't personally get involved with that, but you can do. You've got to weigh up the returns against risk. So if you have £250 and you're so eager to get invested, what's 8 to 10% going to be on £250 to the risk of you losing it? Although it could be a very reputable crowdfunding platform, the risk is you're going to risk, let's say, £500-600 for an 8% return for basically £30.
Yeah.
The risk is higher against £600 for the reward of £30, £35, £40.
Yeah.
So save the money, save your money. Don't be put off and have this fear of everyone sort of ranting and raving that the bank is losing money dramatically. It is, and it's not keeping up with inflation, but it's at the moment it's the only sort of safe bet we have to keep our money safe. Build up your cash, and then invest. Although a recent guest said, perhaps 50,000, perhaps not as high as 50,000, but look to at least gather £5,000, and then start to make investment decisions. And yes, there are a lot of avenues you could go down: crowdfunding, startup crowdfunding. I use one particular site, and if someone was to reach out to me personally, I'd be happy to discuss that particular site. But yes, there is a certain crowdfunding platform that I use, which I've seen good returns, and I will continue to use as a diversification of our money.
I think if people do a lot of research into it, and if they talk to people like yourself who have got experience in those websites and crowdfunding platforms before using them, it's a very sensible thing to do. And I like what you touched on there, is that if you have 250 quid in the bank, you don't really need to worry too much about the whole inflation thing. Yes, it's happening, but it's a lot different if you've got 50 grand in the bank to 250 quid in the bank. The effects are a lot more dramatic with that amount of money, and therefore you do need to put your money to work. If you are someone that's watching that's at 250 or maybe even 2,000, it's really good just to build up that pot of money first. To have contingency funds for general life, which is something we talk about a lot, but then also just learn the practice of saving, earning money, and just being a practitioner before you then start investing money that you might lose. So thanks everyone for watching part 1 of this interview. Now, Aaron, as I've mentioned, you've come out of an ebook recently. Would you care to tell us a bit more about that and where people can find it? And
yeah, sure. So the ebook, real big milestone for me, and really pleased that I've been able to put that out. But yeah, it's called How and Where to Find High Net Worth Investors. And again, we're talking about real wealthy individuals. Where do you find them? How do you connect with them? What methods can you use against valuing your time and essentially putting in legwork, but doing it in a really smart way so that you can maximize your chances of actually building a really good pool of investors. So that's on Amazon now. So you can put in how to find investors or how to find high net worth investors, and that will pop up, and it's doing really well. So really pleased about that, and it's had amazing feedback. So I'm over the moon. But that's where you can find it on Amazon. Yeah,
I'm the majority of the way through, and I have to say you've done a really good job. It really breaks it down into a good way. There's some amazing strategies out there for finding them, and particularly ones I hadn't even thought of, or they're out there, but you don't always focus your brain into them, which is really good. So what I'll do is I'll overlay a bit of it here so you can see what it looks like and you know what you're looking for. I'll also put a link below, the Amazon link below. It's got off to a really good start since launch, and I highly recommend that you buy it and read it, and give it a review if you like it, and drop Aaron a message as well. So
by all means.
Thank you for watching part 1, and we'll see you in the next video.